Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, daily chart, and you can see we've been in this consolidation mode. Bollinger Bandwidth, 2.51. It's been pretty steady there, kind of flattening out. Look, they tried to push it down yesterday. They being the Bears, they had a great Globex yesterday, pushed it down. They hit a 47 area, which was big for me during the regular session, but they could not finish. They kept letting the bulls off the deck. The bulls kept defending it. Now we're right back up in and around the 9-day at 47.92, and the 20-day, the daily midband, up at 47. Call it 94. Where are we trading right now? 90.75. It's about 10 after 8 in the morning Eastern time as I'm doing this. This may bite the Bears. They need to have a good day today, and they need to take out yesterday's low. 46.25 needs to go, and I hate to say it, but it needs to go today. If they do that, then they'll get the Bollinger Band expansion to the downside. What this is doing is just prolonging the compression. The longer it stays like this, the more likely is it just kind of drifts to the upside, eventually deals with the upper band, and we just end up, moseying in this zone until it's ready to expand. The nice part is for all the volatility junkies out there, and you can put me in that crew, this kind of compression is going to yield expansion. The mistake that a lot of traders run into in situations like this is when the tape is compressed, they want to guess at the direction of the expansion. And so they flip and flop and trade like crazed bunnies, tear themselves up, and then by the time it actually wants to do something, their brain is jello, their capital's down, they can't be involved. There are going to be opportunities in the tape. There were opportunities on Tuesday. There were opportunities yesterday. I didn't trade well yesterday. It just didn't. Not every tape is going to speak to every trader, and we didn't have a bad day. We didn't have a red day. We basically had a flat day. It was a big pain in the ass. Got chewed up a little bit. It's these things are going to happen. They're going to happen to everybody. What you don't want to do when you're in the position that I found myself in yesterday, that we found ourselves in yesterday, is you don't want to overtrade. You don't want to sit there and say, okay, I'm going to trade my way out of this. Because then, a day where you end up a couple of handles, you can end up down 10, 12, an ungodly number of handles. And it's days like yesterday, which is why, max risk for us is 6 ticks to handle and a half. You're not going to get, bad things are not going to happen to you at a handle and a half. So I'll be curious to see, you've got claims and housing starts coming up at 8:30. You had retail sales yesterday, which, at the end of the day didn't do much. We're right back into this neutral area. So we're kind of, for our intents and purposes, we're kind of trading in a vacuum. We're getting a little bit of Fed speak. You had that this morning. Hourly chart, and you can see, we've been consolidating. This was a really nice drift down by the Bears. Lower highs, lower lows, get down to the monthly, and they couldn't close the deal. They've taken it from the monthly back up to the weekly, 9-day, and 20-day. So the Captain Obvious statement is 88 to 94 is the key zone going into the open today. Really, Mike? Yeah, it is. The thing I would point out is that historically, some of the choppiest moments for the tape in consolidation zones is when it gets stuck between the weekly pivot and the monthly pivot. What can be nice in that situation is if that zone turns into like a trading range, and it has the potential to do that here. So you had a little bit here, couldn't get through, down and up. We'll see if that continues. If you're the Bears, you really can't let them spend time up in the 4,800s, because eventually they're going to get comfortable in the 4,800s, and they're going to stay in the 4,800s. And if you let them stay in the 4,800s, then those upper 4,800s where you're dealing with the upper band on the daily chart, that just becomes what's next. If you're the bears, you need to defend this area. You've got to get back down here, and it may take some time. And you have to be living down here and keeping the pressure on. The longer you stay below the daily midband, remember that's one of our square one basic things. Are we buy dips or are we sell rallies? The longer you stay below that green line, the more and more this market is a sell rallies market. So you fought over it, you fought off this, and you fought off this, and you got back below here. You need to defend it for a couple of days and stay there. If you do that, then the chances of the bands opening up for a move to go test this 4702 are pretty decent. So today has a chance to be a pretty choppy day, but it's an important day as far as are we closing, above that 88 to 94 weekly pivot 9-day, 20-day or below, and that kind of sets up tomorrow. And Fridays are always a little bit looser. All right, that's all I have. Have a fantastic day. The point I'm really trying to hammer home here is don't tear yourself up if it's not ready to move. Be opportunistic, take profits, don't overtrade in a tape that does not want to make any commitments. Don't commit to something that doesn't want to commit to you. All right. Have a fantastic day. Safe, healthy, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.